We started with a goal of love, the kind you only dream of. You were like my best friend, with the right amount of romance. Shifting seasons, we were up like sun and down like fall leaves. Find it so hard to believe what I'm hearing. My daylight dying with your honesty. And I don't understand all the hurt, all the pain. Why you wouldn't try or try again. I don't understand why you leave me that way. Give me a reason, give me a reason. Give me a reason, a reason. Imagine you forever, whispers of the future, telling me our story, only getting better. Tables turning down life with all the right things in between. Memory of perfect scenes from the beginning, erasing with the sentences you speak. But you wanna leave, and I don't understand all the hurt, all the pain. Why you wouldn't try or try again. I don't understand why you leave me that way. Give me a reason, give me a reason. Give me a reason, a reason.
Sleepless nights, stolen mornings. If you won't pick up, I can't apologize. I regret things said in the moment, but everything we do just clouds my eyes. So I'm gonna make a bad decision tonight, and it's finna get you off of my mind. When you pull my trigger, I pull it good, see you on the other side.
All right, guys, what is going on? Hello. What is Gucci gang? What is a Gucci gang? Welcome to Wall Street Wednesday. It is Wednesday. You know what I'm saying? Where's everybody at, dog? We only got 20 people on here. Where's everybody at? Where are they? Where do they be? Man, so many people are getting into trading, dude. You know, there's like, John, I see you win so much. I need to be on the winning team. Come in. The water's warm, dude. I don't think I've missed in like a week, bruh. Feels great. Not to brag or anything. Ego's the enemy. All right. But, you know, look at the tweets, dog. Look at the Discord. Look at that precision, baby. This is a 1 minute time frame. How many people do you know that have that kind of precision? Think about it. Think about it. So, anyway, sorry, I'm excited. I just had my first energy drink of the day. You know, so I'm like, I'm all out right now. What's good, Mason? 2020, Naruto, Remy, Ibernus, Sean, Jay Jones, Toby, our newest funded trader, Toby. What's good, Capitalist, Jose, Bell, chat is open today. Mr. Young, George, Felix, Juan, Alex C. Let's go. Let's go. So, you know, I slept in today and, well, you know, all right. It was because I went to go watch Gladiator 2 last night. Awesome movie. It wasn't as good as the first one, in my opinion, but it was good. I think everybody should watch it. It was great. You know, Denzel Washington, amazing actor. He did a wonderful job. And yeah, it was great. So I think I posted on my Instagram story that the helmet, you know, the Gladiator helmet popcorn bucket. Jesus, I spent $56 on 2 popcorns and 2 sodas. Can you fucking believe that? $56 for 2 popcorns and 2 sodas. I said, this better be a fucking great movie. This better be a great movie. It was. And no, that $56 doesn't even include the 38 that I paid for the tickets last month. So I spent almost $90 to watch that movie. But it's, you know, was it a $90 movie? I don't think so. But I don't want to ruin it for you. But let me tell you this before we get started. Most movies that are in a series, not all of them actually, you know, use the same actors or go with the same storyline or do like flashbacks, you know, to the first movie. And that's why one of my favorite series is the Saw series. You know, Saw 2, Saw 3, all the way to like 10 or whatever. I think they're making an 11th or a 12th one right now. They need to put it to rest. But anyway, you know, they continued the storyline, and I greatly enjoyed the references. So it was great. And they did quote Marcus Aurelius too. I almost stood up in my seat. I almost started clapping. But I didn't want to be obnoxious. But I was kind of like looking around. I'm like, did y'all catch that? You know? And they mentioned meditations in the movie. They're like, yeah, I read Marcus's meditations or whatever. I'm like, yes. So, but anyway, I won't continue on that. But yeah, great movie. You should go watch it. And that's why I was up late. That's why I slept in today. And that's why I tweeted at 10:44 instead of earlier. So now you know. But let's have this conversation, right? We've had this conversation before, but we'll have it again. I think a lot of traders do not like entering positions late. Okay. And I was this way for a long time too. And even tweeting, right? Like tweeting late, right? Like, why would anybody do that? Well, because the move is not over. And if we take it back, okay, if we scroll back a little bit and we excuse me, and we go back to the masterclass, right? The Market Maker Models Masterclass, the 4M video. That was the secret behind this. It's not a secret, but you know, some people, I don't think some people have not fully grasped the Market Maker sell models and the Market Maker buy models. Okay. Also, this is a really great follow-up to what one of you asked me on Monday. And you said, John, when you have the indices, you know, how do you know when... Hell, I don't even remember the question. You said something like, how do you know if the one is going to catch up to the others, or something close to that? And if you remember what I told you, you don't have to go back and watch the entire session again if you don't want to, but what I had told you, and I just want to make sure that lines up, is when one of them does something the other two do not, that is the one that typically will catch up to another, or the others, excuse me. Okay? And this is what that looks like. Right? So say this one, right? We have a higher high. But the middle one has a lower high, and the bottom one has a lower high. So that right there, of course, there's, you know, other criteria. There's other things to look at, obviously. But I'm saying specifically, when you're looking at this idea, the one that's making a higher high, right? Well, we'll do like a pink line for liquidity, right? If that one is manipulating higher, okay? And of course, like the other two, you know, start selling off, and this one, of course, sells off with it. If the one that is under manipulation, it's under distribution, right? Smart money distributes above old highs. Smart money shorts above old highs, they distribute above old highs. So when you have a scenario like that, if you have an opposing target, okay? So now we'll take this off, we'll take this off, okay? Because now we're going to focus on the one that is under distribution, under manipulation. If we're going to reverse and go lower, then we have to have some sort of target, right? So what would our target be? If we're looking for, at an example, I'm okay. I told you the secret, right, to the precision that's quite unmatched, to be frank. All right. To do something like that, right? The secret, I told you, is a market maker sell model today. So if we have a potential sell model, what would the target be? You let me know in the chat. The chat's open today. It's open to any subscribers, anybody. So what would the target be? And Alex C, I don't even know what you just said right there. What's good, Big James? What's good, Monkey? What's good, Dave? What's good, Marshall? And anybody else that I might have missed. Rogan was just talking about, well, yeah, Ryan Holiday's been on Joe Rogan, the Joe Rogan podcast. Didn't want to short the 5-minute imbalance on NQ from the open. What is your point of view about that? I don't know. I don't always take every trade, broski. What's good, Allison? What's good, Manuel? What's good, Tiago? Paulus. So the target would be equal lows, low resistant lows, an imbalance. Oh yeah, I'll take that too. No, the slurping machines were there, but they were not, they were liquid. They weren't iced, I guess. They were just liquid. I'm like, ooh, I don't want that. Consolidation, lows, low resistance lows, or equal lows. Okay, thank you, Naruto. Right. So that brings us to, and we got to scrunch it up because we're like all zoomed. Okay, this is perfect. Right. So what did I tweet? I said Dow Jones to run the lows or not run the lows. Well, what do you think that means? If we're in a sell model, if we're on the sell side of delivery, if we're in a sell program, are you going to buy that? Are you going to long a bearish market? No. So what would the lows be? The lowest one is there, 44,891. It would probably trade below that even further. I'll get to that in a minute. But for now, okay, I got to show you my absolute precision. Original consolidation. Okay. What's right here? Another consolidation. And what's right here? Another consolidation. So what does that make those? Actually, let's not use that. Let's use the box. Right here. Okay. There's a consolidation to trade higher. So that is a first stage accumulation. Then we have what? Right here. Okay. Again, it's general. You got to be a little bit, you can't expect like perfection. Okay. It's never going to be picture perfect, but original consolidation, first stage accumulation, second stage accumulation to go higher. So what is going to be in here? What do you think? What do you think is going to be in here? If we measure from our target with the fib tool or a GAN box, but the fib tool has all the levels on it, and the GAN box just has 50% in the way that I, have it. I came out with that in 2018, just so you know, the whole GAN box 50%, but who really cares, right? If we measure from the target up to the high that's been set, and we're working within that range, great. Now we have what? Our premium and discount levels. So we can start doing what? We can start looking for setups. We can start looking for the low risk short, or just after that. What do you think? I don't know where I was going with that sentence. We have our highest high. Now we're working within the range, right? So what comes after the high or low that's been set, which is usually seen as manipulation? What's going to be after that? Either the low risk short or the first stage of distribution. So if we're looking for setups, right, where are they going to be? Well, premium and discount is always nice. It's always a nice reference point. It's not always, perfect for some people, but it's a nice starting point, right? So there is 50% up to the highest high. So now we're working within a premium. Also, 25% up to the high. That's your premium of that's your pop, right? I said the other day on Instagram, I'm like, who's your daddy, right? Who's your pop? The pop is premium of the premium, okay? So how's that for an acronym? Who's your pop? All right. Premium of the premium. So do we have any setups up in here? Well, of course we do. Of course we do. We have a short-term high that was taken and we stabbed up there, right here. So if this is a short-term high in a sell model, this is manipulation, right? So it's taking liquidity here and then trading lower. So how did we do that? High, low, higher high that took out that previous high. That's manipulation. So that makes this what? A potential mitigation idea. Now, I wasn't up for this, but again, we're leading up to why tweet here, John. Right? That's what I'm trying to get at. That's today's lesson for you, how to fucking finesse. All right? Do we have an imbalance within that? What's good, Bruce? Do we have an imbalance within that mitigation? And I'll take the premium levels off. I'll take the premium levels off because we're getting a little bit messy and it's gonna get worse. So do we have an imbalance within that mitigation? Yes, it's right there. So that right there at 926, that's your mitigation model. Well, it's my mitigation model, but that's the mitigation model. So that is prime for shorts. If you miss that, I wouldn't probably go with this up candle. I'd probably go with this one, but up candle reacting off the mitigation, that could be a short right here too. This, you would have had to sit through that. Okay. So let's go through some things. 830, right? Volatility. To be fair, I don't know if we're above and on high or not, or something on the higher time frame. I haven't looked at it. But assuming that this was a shorting above old highs moment, okay, then we have, again, another like manipulation, right? So shorting above old highs, that's the Y slime model. What's after that? Mitigation model. What's after that? Up candle. Here, tags into that again. What's after that? There's an imbalance here, right? Now, again, some of these are, what's up in here is hindsight because I wasn't up for this. But I'm telling you, it's important to know what's there because remember, there's an order, okay? There's an order to this. Distribution always sets the high. Manipulation always sets the high. The low risk short always comes after that. And then your other ideas, your up candles, your mitigations, right? We are working with 25% right here. So we're working within the proximity, if you will, of that 25% level. And you remember what that is. It's in the video, it's in your notes. Right around that 25% level is prime for either longs or shorts, right? It's the low risk short right around that 25%. So whether it was this high or this imbalance or this up candle or even this imbalance, it's slightly later, but remember, you're still above 50%. So you're still in a premium. Everything here is in a premium. Everything, all of it. It's all in a premium. Okay. Or even this up candle right here. Right. Some people wouldn't short that or they wouldn't look at that like a short. You don't have to. All right. So what comes after that? What comes after that? Well, let's pause for a second. We are still mindful of original consolidation as the target, right? But we're also mindful that our second stage or second leg, that reaccumulation is likely to become distribution. Yes? What's good, Robert? So if we have our second stage or our reaccumulation, that's going to be important for the other side of the curve, isn't it? If it was utilized for longs, well, do you think maybe later on it would be used for shorts? I don't know. It might. It might be. Who knows? But that's what that looks like. And we have not moved beyond the 1 minute time frame. The very time frame that everybody on Twitter tells you not to trade. Right? It's because they can't do this. They can't tweet, you know, as the move is happening, or they can't tweet at the high because they can't, you know, they can't trade. All right, to put it simply. So zooming out a little bit, right? Just going out to a 5 minute time frame. Okay. Do we have anything there? Remember, do we have anything there that is within the parameters of the reaccumulation? That's this green box, right? We just went over that, which I, you know, drew on a 1 minute time frame. It really should be at that high, but I'll just leave it here. It's not that big of a deal, right? This is the parameters that I'm talking about. Okay. And it's a little bit of a wide range. I'm not going to argue that, between 44,972 and 45,037. Do we have anything? Do we have anything that was utilized to go higher? Look inside of it. Look within these parameters. Was there anything that was utilized to go long? What's that? What is that right there? Well, that's not an inverse 2020. Well, actually, this one right here might be that. Utilized for shorts to go long here. But that's not what I was looking at. Unless you were looking at that, then yes. But I'm looking at this, because this was utilized for higher pricing. Okay. Boom. Look at that. Look at the precision on that. Look at the absolute precision on that, chat, right there. See that? Boom. So I didn't tweet it that high. I'm not going to watch and tweet every single minute of the day. Okay. And I'm not trying to do that. It's not always a timing tweet. Okay. But that, okay, 5 minute imbalance that was utilized here, that was traded through, utilized for the right side of the curve, aka the sell side of the curve, right? Reaccumulation turned distribution. But how do you know to use it here? And what about here? Well, it didn't work here. Or it didn't work here, man. It traded through here, but then, you know, what about that? Well, how about you hold your horses, bro? How about you relax for a second, okay? We got to zoom out a little bit more, all right? 15-minute time frame. The 15-minute time frame was not traded. We didn't get a close, essentially, below this low until 10:15. Okay? So that reaccumulation, pretty much on every time frame, but just sticking to the 15 for a second, that is also a mitigation as well. Okay, and that's why I said we get a little bit messy here, and we are, because we have labeled second stage or reaccumulation to go higher, right? And within that, we have a 5 minute inverted imbalance, and within that, we have a mitigation as well. And remember, we're trading in the direction of opposing liquidity. Wait, that sounds familiar, doesn't it? I think so. It might. I could be wrong. I could be wrong. Am I though? Okay. Random tweet at 3:45 yesterday. If you simply trade in the direction of clean highs or lows, your win rate will improve. Ideal entries are what? After manipulation. Once you lock this down, you just got to stop doing stupid shit in between your setups. Right, that was yesterday at 3:45. Okay, so cut that. Okay, just take the top two. Trade in the direction of clean highs or lows. Entries after manipulation. Okay. Do we have manipulation here? Yesterday's high. We stab above previous day high. We might even be at all-time highs, to be frank with you. Yeah, we are. I think. Yep. Okay. So, all-time highs, stabbing above previous day's high. Then we trade lower. Okay. There's your clean lows. You see how we have a low? And the low to the right is slightly higher. Boom. Boom. Look at that shit, chat. I told you how to trade today yesterday. Come on, baby. Come on. Who thinks I'm not a time traveler? You let me know. Man, John doesn't have a fucking... He's not like Stewie, bro. He doesn't have a time machine. He doesn't have a crystal ball. Sure. Sure I don't. Sure I don't have a time machine in my closet. Of course. It's not because... Chat, you guys got to realize trading is not difficult unless you make it difficult. I'm literally telling you how to trade. You understand? And giving this to you. And this is like almost a day in advance, dude. Almost a day in advance, 18 hours ahead of time, before those lows even formed. Okay? Because the markets, this is how they operate. You understand? This is how they work. And this is why I can tweet like this and hit targets like this. But wait a second. Earlier you said it would extend beyond the lows. Right? How did you come to that conclusion? Well, if I must share with you yet again ideas that I've already shared in the past, what's sitting right here? What's sitting smack dab right there on the fucking chart? A gap. It's a gap right there. 44,849 and 44,826. How far can price go below lows? An imbalance or what? A gap. Check your notes, ladies and gentlemen. Check your notes. They're there if you wrote it down. You see why this is so fun to me, dude? Do you know why this is so fun, bro? And a lot of you guys are starting to have fun now. Getting funded, getting multiple accounts. Trading is not difficult. Once you know this, okay? Once you know these things, the very things I keep telling you over and over again. The very reason, you know, the things like, oh, Bitcoin won't hit 100K. It'll stop shy and trade lower. What do you think that thing has done? Actually, I think it's up today, which is fine. But what did it do? Stop shy of 100K and dropped. How would I know that 2-3 days in advance? How? When everybody was saying, but John, all these people are saying Bitcoin 100K, 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 all the gurus, and you don't even mess with crypto that much. But wow, you were fucking spot on, weren't you? How does he do it? Well, because Bitcoin does that all the time. It does that all the time. It'll stop before, you know, crazy higher time frame level that's never been traded to before. It'll stop just shy and then drop. It does it all the time. It's a repeating phenomenon, but people just don't pay attention. They don't know these little nuances in price like this that I teach to you for free. Literally, I teach to you for free. I tell you I tell you what I'm going to do, how I do it, and do it. You understand? Otherwise, I couldn't do these things. I wouldn't be able to tweet, on the way down. All right. I wouldn't be able to tell you, oh, yeah, target smacked again. I haven't missed in like 2 weeks. I don't even know how long it's been. I know a loss is coming, though. I know I'll get it wrong eventually. And it is coming. But so far, batting 1,000 the last couple weeks. Okay? Because I'm sticking to what is high probability. The very tools I've given you. And that's it. Okay? Literally, that's it. Market maker sell model. You get in sync with price delivery and you will take great trades. It's as simple as that. So let me ask you guys this in the chat. For all of you that are funded, okay? 2 questions. Number 1, the first question. Do you remember the trade that got you funded? That's the first one. Do you remember the trade that got you funded? And number 2, did you get funded by trading market maker buy models and sell models? Or were you just sticking to one particular model, like the mitigation model or the imbalance model or something like that? Because I really want to hear from those of you that are funded. Like, I really want to see what you guys are up to. And it's a great question, Toby. But I always manage my risk no matter how good the trade is. So, I'm not going to over leverage. I've done it, but I don't do it a lot. What was Toby, do you remember the trade that you got funded with? And what are the typical trades that you look for? That's my question. I had a comment on Twitter today, about 8 hours ago. They said I paid more than 200 euros every month for a network marketing company to learn how the market works, and I lost a lot of real money, and I've been with you for 1 year and I've paid not even 50 euros and I'm being much more profitable thanks to you, John. How's that? How's that for a fucking story? Paid less, better results. I love it. But that's what I want to know, like, because I teach a whole lot of things. I mean, at this point, there's 800 videos on this channel. I teach a lot of things. So I don't know specifically what you guys utilize in order to pass that combine, right? Shout out to Topstep, not paid sponsorship. But to pass a combine or a funded challenge or whatever, or even just better results on your own personal account, is it because of market maker models? Or is it just because of an individual model that you just look for over and over again? Or hell, it could even be the inversion model. We haven't gone over that in a while. Do we have that here? Well, do you think we do? Well, let's take a look. Imbalance on the way to all-time highs. So an inversion could be there. So that would be the short here, that up candle right there, with a stop at that high. Does it give a 1 to 2? Yeah, of course it does. Right there. So there's your inversion model as well. That I also taught for free. Man, John, dude, your free stuff is better than other people's paid stuff. I know. Well, to be fair, it's not my stuff. I didn't invent this. I didn't create this, okay? But certain things like the mitigation model, yes, that was something that I found in price on my own, you know, just through trial and error, of course. And certain other, you know, say models, for example, like this inversion model, just finding the first inversion and taking a 1 to 2 and no more. That's unique to me as well. I gave that to you. I gave something that you can automate. Wait, did John just tell us we could build an EA that could trade the inversion model for us? Yeah, you can automate it. It's so simple. It's the inversion on the way to the liquidity run. You trade the inversion 1 to 2. So your risk, I mean, your reward is twice the amount of risk, and that's it. You can automate that. Give that to you for free. Yes. I usually trade, says Toby, the mitigation or inverted imbalance model, but within an MMXM. Perfect. That's pretty much like this, but the only reason that the inversion model isn't my favorite is because of shit like this. You'd have to sit through a lot of drawdown before finally going your way. But if you're just a beginner, if you're just trying to be the laziest trader available, or like the laziest trader, the easiest thing available to me would be probably just the inversion model. It's harder to recognize a MMXM than just play an inversion after liquidity sweep to opposing liquidity. Yeah, that makes sense. And I don't blame you for that. I used the MMXM without even knowing it back then. Just use what I learned from you from IM. Order flow and targets make life easy, and the models on top trading becomes fun at. All right. Anybody watching John for the first time, his things work, not perfectly, thank you, but they work. Librite community is 200,000 away from 5 million in funded just for this year. Jesus. If I've ever seen a pinned message, that's got to be one. Look at that. 200,000 away from 5 million in prop funding just from this year. That's disgusting. That's absolutely insane. With alpha, mostly inverted or not imbalances and mitigations. These with Forex. Now with Top Step, MMXM, imbalances, and always trying to consider time, price, and context. Very good, Sean. Raymond, no, I did not. Is that Raymond like Reddington that you have as your profile picture? That was a good show. That was a good show. No, I'm not a programmer, dude. I can't program anything. It would not look good. I paid, I think, like 30 or 35 bucks for the equities open indicator a long time ago. A long time ago. Oh yeah, and this was all above equities open as well. Shorting above the open in bearish conditions. I didn't program that. Same with the macro. Oh, Jordan. Is Jordan D in the chat? Jordan D, are you with us? There's your exercise, brother. 11 p.m. macro. Hit the lows. Where's our boy at? Where's Jordan? Oh, we didn't hit the gap until after outside the macro. Okay, that's fine. But at least the lows were hit during a macro. How's that for time, price, and context? That's not bad. Macro open, trading into these up candles to go lower. Look at that macro. Beautiful shorts in that macro too. Not bad. Only 1% a week at 5 million. That would be a big bag. Oh yeah, it'd be a fat bag. That'd be a big old bag. But anyway, what I was saying, no, I didn't program the macro indicator either. That was John Doe, D-O-U-G-H, John Doe in the chat who did that. But anyways, what questions do you guys have today? Because that's really all that I have for you. You know, we reviewed. We actually spent the entire stream on Dow Jones. I don't think we've ever done that. Wow, there's a first time for everything, chat. We always talk shit about Dow Jones. We're always like, oh, it's garbage, get it out of here. But we have spent the entire stream on Dow Jones. That's a first. That is a first, chat. Man. Nobody noticed that, huh? But yeah, anyway, what questions do you guys have before we hop off here? Because that's it. That's all I got for you. You know, Thanksgiving, I think, is tomorrow. I wouldn't expect much for the rest of the day. I already gave you some precision today. And I'm all out. My crystal ball is all out of juice. It's out of batteries. I gotta go put my crystal ball in the charger. Could I go over Forex pairs? I guess so. I just don't, I mean, like, I don't have anything for it, dude. I don't have anything. I told you dollar, I don't know. I told you yesterday, I was like, I don't know what the dollar wants to do. I guess it's bullish, you know, because a friend of mine wants to be bullish. And I said, but I honestly don't know. And we're lower. So that's not a surprise. Okay. If you remember from Monday or Tuesday, I told you about Euro. And I told you that I would not short the Euro. I told you I wouldn't short because we had came off that higher time frame low from October, I think. And then we ran into that monthly imbalance. I said I would not short Euro. I wouldn't do it. And where are we? Higher. So, you know, that's not bad. But I'm not long, so, you know, can't really brag too much, I guess. And British pound is following suit. So is AUD USD, Aussie, and so is Kiwi. Kiwi arguably had a lot cleaner highs. We have clean highs here. We have clean highs here as well. Let me see something. That is absolutely hilarious. Look at that. I didn't even look at New Zealand before I tweeted that. Straight in the direction of clean highs. You got clean highs right there. And you got clean highs right there. Where did we go to? That's just, bro, that's just disgusting. That's just so nasty. Literally, I promise you, I didn't even try to do that. But it just goes to show that the markets operate on the basis of liquidity. Friday low taken on Monday. That's last week's low. Retracement. This could even be seen kind of a shitty market maker buy model in a way on the 1 hour time frame. But yeah, that reversal on dollar is going to send foreign currencies higher. And so we saw that already. And yeah, so I wouldn't know what to do with currencies at this point. I wouldn't know. I guess you got highs at 127.20 for British pound, but if there's one thing I can tell you, bro, it's that higher time frames, right? Higher time frames. Okay, we talked about this. I don't know if we did last week. I think we did last week, but I know we talked about that this week at some point, and we're having an up day, right? We were expecting some sort of upside. Otherwise, I'd have been wrong. I wouldn't short, and then it goes lower. No, we went higher. But I gave you the justification for that. But as far as like right now, oh, what are we going to do with currencies? Bro, I don't know. I don't know. Okay. Currencies are like my least favorite thing to trade. They're just my least favorite. Index futures are, to me, are just, I mean, you see what I do on the indices, bro. I don't think it needs to be explained. You already know. Rob, I talked about that earlier. I thought Gladiator 2 was a great movie. I paid a lot of money for popcorn and drinks, but it was a great movie. So 2020 passed another 2 funded accounts recently with all the things you've taught us this year. Very nice. Trying to open 5 accounts, 2 more to go. Right, so there you go. That's 3 funded accounts for 2020. You always say once you see it, you can't unsee it. It is the same with thinking in probabilities and the psychology, right? Once you think it, you can't unthink it. I guess is how that would go. I don't think I've said that before, but I don't know. Maybe we can roll with it. We'll see if that catches on too. How would you recommend to do payouts? Should I go for 30 winning days, run, and 100% payout rather than often 50% payouts? Toby, that's up to you. That's entirely up to you. In theory, I've seen some great theories on Twitter. And the idea is if you're a good trader, you know, if you can keep getting funded accounts and stuff, then if you want to cash out, then go for it. And if you use that cashed out money to get more combines or challenges or whatever to scale up, you know, I could see that being a thing. But if you have one funded account, if it were me, I wouldn't cash out. 50% is fine. I wouldn't cash out and close the account though. Cash out 50%, take that money, get yourself something nice, a little bit. Don't go wild, but you know, get yourself something nice. Maybe a dinner, or pay off something like a car or part of your car, part of your house or something, whatever. And use the remainder for other accounts. Am I making sense? Like, oh, you got a 50K or 100K or 150K. Take that 50%, get yourself something nice. Take the remainder of that and use that to go get more 50Ks or 100Ks or 150Ks. Does that make sense? So use that profit money to scale is what I would do. I wouldn't close out the whole account just to take a fat payday. That's great, but then you're going to regret it. You're going to go, oh shit, I don't have a funded account anymore. So that's what I think. But I'm not a licensed financial advisor, so do what you think is best. How could it be that liquidity from October is still available, or older liquidity like 2022 low or something? Why is there still liquidity? Raymond, because you have to realize we are not the only traders. There are banks, hedge funds, and large institutions that trade on those really, really high time frames. There is retail liquidity, and then there is institutional grade liquidity, and there is a massive difference between the two. So like intraday stuff, you know, that's going to be a lot of retail traders, and I'm sure, you know, some sort of big money is going to be there too, of course, but it's those higher time frames that's going to be the biggest magnet on price, like these highs here and these highs up here. Okay. And that's why I gave you, if I can say this one more time, that's why I gave you euro. That's why as soon as we hit that and traded off of it, I said I would not short this market, because that to me is institutional grade liquidity. This was from October. So hedge funds that are trying to long euro in here where's their stop going to go? Down here. That's why the market does that. Make sense? So a lot of people make threads and stuff on liquidity, but they don't ever mention that. They don't ever mention that. I do. So yeah, Martin, the idea I just gave you. So if I may, well, this will be the last thing that we'll hop off here. Okay. Do you remember Monday's live stream? And I gave you this, right? I gave you that imbalance. I gave you this, that would be a breakaway and that the target was 6,007. I gave you the entry at 59.98 before it happened. And I gave you the target of 10 points, right? How could I trust that that low's been set? Well, you could always, do a divergence. Sure. I don't know if there was one or not. I don't remember. I couldn't even tell you what I had for lunch on Tuesday. So Monday, who really knows? But that low is enough by itself, sure. But because that low respected 50% of the inverted gap on the daily, that's why I would trust it. This is Simba, right? The little lion, the cub, if you will. And that big ass gap on the daily time frame, that's Mufasa. And so Mufasa is backing up Simba. That's how you know. So it's not just the low or the high that's been set. Is that within something on the higher time frame? And if it is, you can trust it. But you won't always get it right. Same thing here. It didn't close in that gap, but it took a short-term low and took Monday's low on Tuesday. Oh, that's not even Tuesday. That's Asia. What the fuck? All right. Well, same idea. The PM session took lunch's low, left the remainder of that daily inverted imbalance and gap put together, left that open. This became probably a smaller time frame mitigation to go higher. So that's how you can trust it. Higher time frame stuff. Okay. Do they have regulations so they can't get out of positions easily? It's not so much regulation. It's just the way they do business. Okay. They're not going to take on a bunch of massive risk to take, 10 points out of ES. They're looking, you got to realize banks, hedge funds, institutions, right? Big money. They're not trying to, buy on Monday, sell on Thursday. Okay. They're trend following. That's just their nature. Most of them are not day traders, swing traders. They operate on the basis of like 6 months, 8 months, a year, maybe a couple of years. They're thinking long term. They don't do what we do, trying to long an imbalance on the 1 minute time frame. They're not doing that. They're scaling in, they're scaling out. They're building positions, scaling in positions, scaling out of positions. So it's not that they can't leave positions early, but it's like it defeats the purpose. Their entire business model is long-term trading. Okay, not day trading, long-term trading. Okay, and that's for everything. That's for indices. That's even for stuff like currencies as well, right? And you see that in the markets. Okay, it's very simple. You see the trends: bearish, bullish, bearish, bullish, bearish. Okay, they're scaling in positions, scaling out of positions, so on and so forth. And that's why you can see like major highs get taken or major lows get taken. It's all liquidity. All right. So with that being said, hopefully that has, or hopefully this video today has given you some insight on hopefully how to be a better trader, how to get on the right side of the market. As always, you can go to my Twitter. You can hit the follow button, but you can post my tweets on your chart, even the one that I posted yesterday evening or yesterday afternoon about how you can aim for clean highs and lows. You can put that on your chart. It's why I make things public, available, to teach you, to show you the skill set, to show you that it can be done. And that you can make a Twitter too. You can make your own ghost account. And a lot of you have started doing that, and I'm glad. Let me ask you this before we hop off. Let's do a poll. We haven't done a poll in a minute. We haven't done a poll in quite some time. Do you like posting tweets on charts? And that goes for both. Do you like posting your own tweets on charts? Do you like when I post my tweets on the charts? Or do you think like, nah, no, that's not beneficial, John. That's not beneficial. Do you think stuff like that's cool? Because I do, okay? You don't have to vote, you know, based on what I do. But I like to do it. Okay, stuff like this. Do you guys like when I do that? And do you like doing it on your own? Let me know. Because look, bro, I did not have this when I grew up as a trader. I didn't have that. Literally, I did not have tweets on charts. But the more that we advance in technology and the more, you know, tools, and like even the bar replay. I grew up as a trader not having bar replay. That's why I don't use it. That's why I recommend for other people not to use it either, because that's not real back testing. That's fake back testing. You get to see if you were right or wrong instantly, and you don't get to sit through that trade. But stuff like tweets on charts, I would have loved to have somebody that was able to do that. You know, tweet either at the high or on the way there. You know, what are they aiming for? Why are they aiming for it? I never got any of that. But you guys get that opportunity. Oh, welcome to the club, Jordan. You saw that 11 p.m. or the 11 a.m. macro delivered right to the lows. That's right here. Beautiful. 1108. 1108. Yeah, that's just mint. Tweets on charts are amazing. I would agree. How do you backtest without the bar replay tool? Well, Raymond, I guess you don't. You just study price, bro. That's why backtesting is limited in its ability to teach, because you're missing the most crucial part of like sitting through trades. Thank you, Cam. Appreciate that. No. Raymond, the macros are not any sort of settlement cycle. First of all, I don't even know what the fuck a settlement cycle is, besides probably the last 10 minutes, the MOC, 2:50 to 3 o'clock, right? That's market on close. That might be what you're asking about, but I couldn't even tell you what that is. And yeah, Jordan, the hourly open indicator, which I still haven't put on my chart yet. I'm terrible. All right, Cameron, that's a good way to end it. I've always preferred to just suffer the lessons of the live market. All right. Anyway, that'll be it, man. So y'all be good, be blessed. Appreciate the poll. Appreciate the poll. Almost the 80-20 principle at work here. 83% said you do like the tweets. 17% said that you do not. So that's interesting. I don't know why you don't like that. Or are you just jealous? Is that what it is? You're just jealous? No, I don't know. I'm talking shit. Y'all be good, man. We'll be here same time, same place on Friday, the 29th, for the last live stream of the week, the last live stream of November. Tomorrow on Thursday, I'll put out some sort of market review. All right. I'll put out a market review tomorrow. All right. So be good. Be blessed. I'll see you on Friday. Don't do anything stupid between now and then.
I dream in phosphorescence, bleed through spaces, see you drifting past the fog, but no one told you where to go. Well, yeah, I spit blood when I wake up. Sink porcelain stain, choking up brain matter and makeup. Just 2 days since the mainframe went down and I'm still messed up. Room feels like a meat freezer, I dangling like cold cuts. Missed calls, answer phones from people I just don't trust. Mirror talk, fake love, but I'll take a pound of your flesh before you take a piece of my pay stub. White roses, black doves, godmother, rise up. I need you to see me for what I